Hello everyone, this is Professor Raghavendra Adhyapak, KLS Koti College of Commerce, Belagavi. So in today's class, we are going to start with next unit, that is unit number 5, pricing, practices and strategies. Okay. First, we'll see what is the meaning of price. Price refers to the sum of money for which anything is bought, sold or offered for a sale. In simple words, price is the money value of goods and services. Correct? So, in simple words, what is the price? Price is the value of a particular product or goods or services. Okay. Next, we will see what is the meaning of pricing. Pricing refers to the process of determining the price of a product. It is the method adopted by the firm to set its selling price. Okay, we know the what is the meaning of price. Price means value of goods and services, correct? Now we'll see what is the meaning of pricing. So pricing is nothing but a process of setting the price for a particular goods or services. Okay, it refers to process of determining the price of a product, that is called pricing. Now we'll see what is the pricing policy. So pricing policy refers to the policy of setting the price of the product and services by the management after taking into account of various internal and external factors and its own objectives. So in other words, pricing policy refers to the policy by which a company determines the wholesale and retail prices for its products and services. Okay, so what it says, policy. What is pricing policy? Pricing policy refers to setting of the price for a product or service by the management after taking into various internal and external factors and its own objectives. Okay, so to set any price for a particular product, the management have to take the certain decisions, correct? They have to study the different aspects like internal and external factors. So after studying all those factors, the price will be fixed to a particular product. Okay, so such policies are known as pricing policy. Next is objectives of pricing policy. So now we'll see what are the objectives of pricing policy. First one is profit maximization. Yes, each and every business organization is basically started with a profit motive, correct? So basic objective will be profit maximization. Next, price stabilization. Next, facing the competitive situation, correct? So in case of facing the competitive situation, the manufacturer or a producer set the price in such a way that by taking consideration into the competitor's price, correct, then only will be stabilization in the market. Otherwise the people will prefer other goods compared to our goods, right? So in that case, price facing the competitive situation, price is very important. Next is capturing the market. So in case of capturing the market, what people will prefer, a good quality of product in a cheap price or in a normal price, correct? So if the price should be set up in such a manner that by which it is affordable to a customer in the market, then people will buy such products more and more, by which it can capture the market. Okay, next, to establish the equilibrium between a demand and supply. Okay, so we already studied what are the demand, what is the supply, and what are its determinants, etc. Already we know that. So already we know that the people will demand more and more at a lower price, but supplier wanted to supply at a higher price. When the price will high, the supplier will supply more and more, but customer prefer purchasing the goods when it is at a lower price, like that. So to bring the equilibrium between these two, demand and supply, the pricing policy is important. Achieving the target returns, correct? So to achieve the required target, to get a maximum profit, such pricing policies are required. Entry into a new market. So while entering into any new market, price should be in such a manner that compared to other competitors who are already in that market, compared to them, your price should be matched or it should be a lower to that. Otherwise, people will not prefer such goods, correct? So while entering into a new market, pricing policy are required. Next is determinants of pricing policy. So determinants are nothing but the factors which influence on the pricing policies. In that, first one is cost of productions, correct? Next is competitive situation in the market. Next, distribution channel. Next, business cycles, government policies, buying patterns of the customers. So these are the different points which affects on the pricing policies. Now, cost of production was the first point. How cost of production determines on pricing policy means the different factors of productions, whatever we use to product any particular product, those are the all expenses, correct? So after doing all that expenses, we'll produce a one certain product, correct? So to that product, we will add our profit margin, then we will sell it to the market, sell it in the market, right? So to fix a price to particular product, the expenses or the cost already which we incur to produce that are very much important, correct? So to determine the pricing, the cost of production will also affect. Next, competitive situation in the market, correct? To fix any price, we should have analyzed on a market conditions what other competitors are doing. According to that, we have to set the prices, correct? Next, distribution channel. Even these channels will affect. What is the distribution channels? Like manufacturer to wholesaler, wholesaler to retailer. There will be agents, there will be dealers, correct? So like that, different persons are there. Different person commission should be given. Their remuneration should be given, right? So like that, the different factors will affect on the price, because at the end, after including all those expenses, the price will be set up, correct? Next, like that, government policies and the buying patterns of the consumers will also affect on the pricing policy. Next is pricing methods. What are the pricing methods? The pricing methods are nothing but the price, how it should be, in which manner or in which method it should be fixed to a particular goods or services, that is known as pricing methods. So what are the pricing methods we are going to study under our syllabus is marginal cost pricing, target returns pricing, product line pricing, administrative pricing, competitive pricing, dual pricing, transfer pricing, and cost plus pricing. So regarding these different methods of pricing, we will study in the next class.